What's up? What's up, folks? It's been a while since I've been on, but I've got something to show for it. Maybe, hopefully. All right. So, um, I've been taking some time, just doing some coding, some easy language stuff, scripting, doing some other stuff outside of stocks. Um, but yeah, so today I'm going to show you. So over the course of the last week, I've been spending a little bit more time working with ticks. So, like I said, as I've been looking at the charts, trying to understand where the relationship is between volume and trades, I see that volume and trades, it's weird because just because I buy, just because I have one transaction does not mean that I buy one share. Just because I have 10 transactions does not mean that I buy 10 shares. But if you look at the volume is up here. This is ticks or volume. This is something different. I'll show you what I'm talking about. But volume and trades, the indicators look almost identical, right? So when you have a lot of trades, you've got a lot of volume, and that doesn't necessarily make sense because, again, just because you have 1,000 people come to your show doesn't mean that you made $1,000. You could have made $10,000. You could have made $100,000, or you could have went to another city and you had that same 1,000 people come to your show, and now you made $50, right? So they shouldn't be equal, but shouldn't be equal to me. But the market makes them look equal. It makes it balanced. And I think in that way, the market makers can make sure that, that the market is balanced. So they kind of force it to be balanced. If there's a bunch of trades coming in, they put a bunch of volume on it to soak it up, right? Whatever. But I found that there can be, when there's a little bit of an imbalance, when there's a difference, then that's when you see the market shift or do a pullback or something like that. So I took that and I put it in an algorithm, and then it gave me these red bars here. It gave me these bars. So I'll show you exactly what I'm talking about. Let me see if I can pull it up. Bear with me. Okay. Looks like I'm having some technical difficulties. There we go. Okay, I think we're good. Okay, so I'll show you what I'm talking about. If I go to, let's add ticks. So, and I don't know that there is an actual ticks. I don't know that there's a ticks indicator that already is in TradeStation, but I made one. Ticks or volume, tick count. Okay, so I should really put this as just one exclamation mark so that I can. So I need to change a bunch of these, like retitle them so that they're easier to find. Since I've been doing this for several months, I've kind of changed my, not the algorithm, I've changed the nomenclature for for labeling and titling these things. But anyway, if we do tick count, we hit OK. We're going to put that at scaling like subgraph. I don't know where it's going to pop up at. Let's do subgraph 6. And so this is the tick count down here. We're going to take this, we're going to drag it right below, see if we can get it in there. We want it to be on its own. I've been doing this recently, playing with dragging this to a new location. I can never seem to get it at the right spot. It always, oh, that was good. Okay, so let's just hide this for the time being, so it'll be easier for you to see. Disable. I don't want to disable that. I'll lose it. Lower that, and do this. Okay. So for the most part, and this chart is a little bit different, but for the most part, like I said, you'll see if you look at this bar and this bar, this bar and this bar, if you compare all these bars, all these five or four, these two came up, these two came up, this one, this one, this one, this one. All these bars are relatively the same, but now these blue and red bars up here are volume. These green and orange bars down here are ticks. So the ticks are the number of transactions, the number of trades. So the number of trades and the number of transactions do not have to be the same. If you go to Walmart and you buy something, you could buy one thing, that could be one transaction, or you could go to Walmart and you could have one transaction or one trade, but you bought 10 things. So they do not have to be equal, but yet if you look at these, they are roughly equal, right? There's a little bit of difference in here, right? So you see this right here, this area here got a little bit larger, but this area is smaller. And what happened here? It was a pullback. This was a change from this, and something different happened thereafter, right? So that's what I was kind of seeing when I was going back and I was looking at the charts. So what I did, instead of just watching this constantly and looking for the shift, I just put it in the script. And I did something like, so for one, I'll get this one out of here, because now you know what I was looking at. So I put it in a script, and I was that absorption, tick, or volume? Ticks or volume, right here. Okay, so we turn that back on. Okay, so this is ticks or volume. Okay, and so pretty much what this says, is that is pretty much finding the average of ticks to volume, finding a ratio of ticks to volume. And so that ratio of ticks to volume, it might be a 1-to-1. And like I said, when you look at the chart, it kind of looks like a 1-to-1 when you have this much ticks, you have this much volume. When you have this much ticks, you have this much volume. When you so they're roughly the same. When you have this many ticks, your ticks may be 3, but your volume may be 3,000 shares. Your ticks may be 6, but now your volume is 6,000 shares. So the ratio is roughly the same. So now that you have a ratio, now you have that understanding of that relationship. Now we want to see which one ticks, trades, or volume, which one gets out of whack, right? And if volume gets way above the ratio, or if ticks gets way above the ratio. So what I did was, if volume gets way above the ratio, this is blue. This line is blue. If ticks gets way above the ratio, this, or not way above, but if it's above. So if ticks is above the ratio, that bar is white. If volume is above the ratio, that bar is blue. Now if volume or ticks are like 4 times greater than, not the ratio, but if ticks are doing its thing, volume is doing its thing, you have a tick moving average, or average, you have a volume moving average, or average. So if on the bar that we see that volume is way above the ratio and volume is like 4 times greater than its own volume moving average, that's when we're going to put a red cross. And then I think if the ticks has a, you see here the ticks are really high, but the ticks aren't way higher than the tick average. And if it was, then there would be a green cross here. I need to double check that because that is pretty high. Let's go back and add tick count because I had the moving average there. Yes, make sure. Okay. So even though this tick count was really high, here's the average here. I'm probably going by that yellow line, which is a 6-period moving average. And so that 6-period moving average, if you look to the right hand side of your screen, all the way over here, you see that's roughly 20,000. But so in order for this to have a green cross, it's going to have to be like 80,000. It's going to have to be 4 times. Now I can adjust that. I can adjust that threshold. Let me see. Yeah, okay, I have it at 4 times. If ticks is greater than 4 times the average, then da-da-da. All right, but you saw that it was roughly, what was it? Just a little over 50,000. So 50,000 from the average of 20,000, and that's not the 6-period moving average I did it over the 10-period moving average. But at any rate, to get 50,000 from 20,000, we'll just say 2 if it's greater than 2 times, so 200%. So we'll do that just for kicks and giggles, and then I will verify it. Okay, now that after I verified it, now you see that this did pop up green, right? But now we have a bunch more greens, and we don't necessarily need more entry signals. We need good entry signals. So like I said, 4 times I found to be somewhat significant. Change that back to 4, re-verify it, and then it gets rid of all those greens, right? So that being said, we saw a lot of greens show up there, right? But the greens weren't necessarily significant, and I think that's what I found, was that the greens indicating the number of transactions, number of trades, wasn't as significant as the volume increasing with the same number of trades, right? So the volume increasing with the same number of trades means that that same number of trades, 2, instead of 2 trades wiping out 2 shares, now 2 trades wiped out 4 shares. And what is that? It's absorbing more. It's absorbing. So that's your absorption. So that's when your market makers or larger money have more money, a larger what am I thinking? They're just putting more money on that spot, on that area. So yeah, that's absorption. That's significant. And again, so looking at what I've got here, this is kind of working for these smaller moves. It doesn't work every time, but this is what I'm kind of going to sit here and figure out today, is what what's the risk to reward ratio? Like this one here, it didn't work, but why didn't it work? Or should I be looking for it to move up first to break this? You see this pink line, we already have a descending trend line that was formed, but should I only take trades above the descending trend line once we get a break, or can I take them under the descending trend line? So this one here worked under the descending trend line. I have a blue candle there. Is that a blue candle? No, that was a non-period moving average. It just crossed it and it looked blue. Okay, but I do have some. I have made some. I've painted some candles. So if you look at some of my other chart, you'll see that candles are painted as well. Yeah, you see these look really white. These are candle paints, but these aren't as reliable as some of the other things I've been doing. So like I said, I've made several scripts, and some of them have been good, and this one is not as good. I should probably just go ahead and modify it. Because all of this is you see this white is different from this white, right? This one has an outline. This one does not have an outline. So this is a bar paint. This bar has been painted, candle has been painted. Okay, and then on one of my another one of the scripts I did was calling for reversals. So I did a few things with like linear regression and slope and that kind of thing. And then when those things are met, it puts this on my chart. It says reversal. And those actually have been looking pretty good. I don't think that the 15 tick chart was the chart that it works as well on. But it tapped this one on the shoulders, right? Boom. And that was kind of the lowest. It went a little bit lower, but that was a good low point. And then from there it went straight up. But like I say, it's supposed to be more so reversal, so it's not supposed to catch every pullback. All right, let's see what's moving for the day, and then all right. And I might reset this thing. Yeah, I might reset this and come back into it at 8 o'clock. Because that is when I can actually take any actual trades, because you can't trade TradeStation pre-market, so I found out. Alright, but that's what I'm going to be looking at today. Alright, SPRC. I've got a little something different on each time frame. There's a 15 tick time frame, and so I've got the ticks of volume on here. Now I think like on the 1 minute time frame, I don't have that. Yeah, because I didn't find that it was as applicable there. I do have something called absorption versus ticks, and that kind of works with the same idea as the ticks, the absorption. The ticks are volume. Some of the same premises. All right, this is just low liquidity here. So, but SPRC moved yesterday. It moved up just long enough for me to get out of my position. Thank you. And I think I got out right there. somebody mentioned in one of the forums that SPRC was moving. I looked and said, whoa, yes it is. And so by the time it got up here, I think it had just crest my entry, and it pulled back. And then once it came back up here, I was one of these sellers, right? So I was one of those sellers. And then it moved on down the rest of the day. You see this absorption versus ticks. This cross here isn't working as good. Not working as good. Yeah, these don't work as good, but SPRC 1 minute time frame. Let's go to the 15-second time frame and see on that same day what kind of, well, let's stretch it back. 15-second went to, excuse me, 2 days back. Why does that not look like 2 days back? Oh, probably because there was just no volume there before. So because this is the tick time frame. So let's go, but still on days, you should go back a little bit further. What day is this? Yeah, the 14th. Okay. All right, but I needed to go back a number of days so that I can get data here. Let's go back 20 days. There we go. Okay, so there was volume here, 1031. So there was some action back there. Okay. And then there was no action. 11-1, 11-1, 11-2, 11-3, 11-6. Yeah. Okay. So, and I have to look back because this ticks versus volume isn't giving a lot of entries, and this one that it does give is haphazard. What happened in there? Because that looks like and that's why I say, well, I mean, of course everything's not 100%, right? But this bar here does drop down to this level of support here, which is interesting. Let's get that. But it didn't reverse there. But technically it would be hard for that to reverse anyway, because we already had a pivot here. It came back and it retested it there, and then we had a hard drop. So I think that hard drop would negate this being a pivot. So I have to make a mental note of that. That hard drop there. All right. Yeah, let me reset this. Go get some coffee. Ooh, sunlight's coming in. All right, and I'll be back.